What would I suggest to somebody who's having a little bit of a rough patch, or someone who's, a little bit disillusioned with the results they've had in their trading? Well, firstly, what I would suggest is actually stop. Just stop what you're doing, okay? Stop trying to throw, good money after bad, okay? And when I say stop, there's a great mnemonic from a chap called Timothy Galway, who's sort of recognised as the godfather of coaching, and STOP stands for step back, take a time out, organise your thoughts, and then proceed. Okay, and that could be a couple of minutes, that could be a couple of weeks. Okay, so when I tell people to stop, that's what I'm intimating to them. Okay, take a little bit of time out. Okay, take a bit of time out to recognise what you've been doing. So once you've stopped, what I would suggest a person is, have they considered the relevance of the 4Ms in their own trading? Are they managing markets? Are they managing method? Are they managing money? Are they managing themselves? Okay. If for private traders, if they need to start somewhere, start with managing money. Okay. Are you managing risk correctly right from the off? I said those two simple rules that I sort of suggest everybody works with are that: firstly, you never ever trade without a stop loss, and secondly, you never risk more than a small portion of your account on any one trade. That way, you will make mistakes, you will have losing trades, but you'll always be able to come back and have another go next day. And what you'll do is you'll also start to build a wealth of experience, okay, from those failures and from those successes, that will over time improve your performance and your success in results as a trader. If you feel the need to, then you can also consider spending some time working with a coach or a mentor. There are plenty of them that are out there. There's some very, very good ones that you can actually sort of engage with. They may help you. Overcome any hurdles or obstacles that you're particularly working at or have been struggling with. But primarily, start with just taking a bit of time to recognise, are you managing those 4Ms of trading? If you're not, then you can start to put those in place. What I also am very, very keen on advising people to do is to keep immensely good records of their trading activity. It's not enough just to take a Excel download from your broker's platform. What I like to see is to keep good records, a good trading journal or a trading diary about how you're actually trading. Okay, Dr. Alexander Elder, who's regarded as an immensely good trading coach, came out with a great line that if you show me good records, I'll show you a good trader. And in all my time of working with individuals, I hold that to be absolutely true. The people who've got the best records are the ones who are trading well. When they do have a performance slump, they are able to identify why that's happened much quicker, and so they're able to turn it around far, far quicker. You'll find that you have if for most traders, they're going to be trend following traders, okay? But what they also need to recognize is that there are trends within yourself, okay? And you need to have that data to be able to sort of identify when you're trading well. What does that actually mean? Well, talking from one of my own personal experiences, I recognized in sort of 2009 when I was trading that I started trading Sunday night and would trade all week. And what I found was that 50% of all my losing trades were trades that were triggered on a Friday. Okay, they were all the trades. 50% of all my losing trades were Friday trades. Okay, the reason I was able to identify was I kept really, really good records and identified how my trading was on not only like quarterly, monthly, weekly, but also daily basis. So I was actually able to do, to deliver a great solution, which was to basically stop trading on Friday. That's what I did. But I was able to do that off the back of good, hard data that I had kept myself, rather than just a kind of anecdotal sort of finger in the air, hoping that I would actually make the right solution. What I was able to do was identify off the back of good records, and that gives you an immensely strong position from which to move forward and improve your trading over time. One of the other things that I would talk to an individual about is that make sure that you have those support structures in place. Private trading, it can be an immensely lonesome endeavour. Some people can find themselves sat there all day on their own, trying to make the best out of the financial markets. Okay, that's not always a good space for a person to be in terms of trading well. So ensure that you have the right support structures. Make it start in the home. Make sure that your partner and family are behind you, understand what you're doing and support you. Make sure your friends and family, they're there to able to help and support you. Start to get to know other traders. Start to build a network of traders around you. There are trading socials all over the country and all over the capital that you can engage with and come along and meet people who are doing the same thing as yourself. Start to build that. And then as I said, if you need professional support structures, then you'll find that there are coaches and mentors out there that can help you. And but it's important to recognise that to have those support structures in place. We are social beings. It's sitting at home on your own, doing this on your own, it is rarely a successful endeavour. You make sure that you build the right support structures around you in terms of building a successful business. So to conclude, I would say, just make sure that you're covering those 4 M's of trading. Make sure that you're managing money in terms of managing risk. Make sure that you're managing yourself in terms of support structures. Make sure that in terms of your method that you're keeping good records so you know what you're actually doing, and make sure that you understand what the market environment is doing at that time. Okay, and with that, hopefully also recognize that slumps in performance, especially for intraday traders, they're more the rule than the exception. But by actually keeping good records and by keeping on top of those 4 M's of trading, you'll be able to recognize the trends within yourself and able to turn around your own trading in a far, far swifter period of time. Is it possible to recover your trading account after catastrophic financial loss? Yes, it is, and I've seen individuals achieve that. I think a lot of it is about context. Okay, so if you have if you've lost a sizable sum of funds, and I've seen people who've lost very large 5-figure sums in a single day. Okay, and not surprisingly, that's catastrophic below to their emotional health, their financial health, sometimes their physical health, and it's about how they respond to that. Some people it'll be just too much for them. They'll wither away and die. Others will get into a spiral of revenge trading, trying to chase the tail, trying to chase and get that money back. That rarely works either. Invariably, what tends to happen is that actually they compound their initial losses. And then there are those who will actually take a little bit of time out and just assess, what happened, what actually went wrong, and then be able to sort of put a plan in place to actually to turn around their trading. It might take a year or so to get back those losses that you've lost in one foolish afternoon. Okay, but it can be done, but it has to be done in the right way, and it's about recognizing that it's part of your journey as a trader.